Welcome back to 99 The News. This is Kevin Thompson, and we're talking about Kohl's and Joann's Fabrics. A lot of you may be driving around your neighborhoods and seeing that, wow, this place is boarded up. This place is closing down. But why is this continually happening with the Red Lobsters and the restaurants around the country, with the retailers around the country? Was it because of pandemics? Was it because of just slowing economic trends? Well, I'm gonna answer some of those questions for you today. And what I'm gonna start with is that yes, it was the pandemic. Yes, that has something to do with it, but it also has a lot to do with private equity. Private equity had access to very cheap capital, almost zero interest rate. So they were borrowing money for free. The world was awash with money. So these companies went out and started buying up all of these retail industries that were sort of struggling, that saw their sales declining, in the hopes of bringing them back to prominence. Well, what their job was to provide them capital and equity to get their companies going. But what a lot of these private equity firms did was they did a couple different things. They issued either sell leasebacks, where they would uh, buy the equity out of the real estate holdings, and then lease the real estate back to the actual companies and receive those cash flows, which saddled those companies with debt. Or there's other things where they did leverage buyouts. And in this case, with Joann's, they would just use company debt, leverage the buyout, buy the company out, and then saddle the company with debt and charge the company management fees. And in this situation, Leonard Green and Partners, they charged $5 million a year back to Joann's to manage the company. And then they took the company public in 2021 to go out to the public markets and to raise capital and to ultimately be able to get more of their money out of the company. So, is this a wrong thing to do? I'm not saying it is, but what I am saying here is that this has led to massive layoffs of people around the country that worked for these companies. Joann filed for Chapter 11 bankruptcy for the second time, and now they're looking to possibly go out of business entirely. Now, here's the thing. This is what I said. The primary driver behind these layoffs is the rising cost of capital. If interest rates go up, corporate margins are shrinking, forces businesses to cut back. The era of cheap capital and unlimited spending is over. It's forcing companies to rethink their strategies and efficiency. Not only that, in this current environment, hiring is slowing, and the likely result is weaker employment data. And these next numbers that are coming out with government employees going into the line, it's going to be very, very difficult. So, all I'm saying is that in this current environment, employment is slowing, hiring is slowing, and companies are going out of business because of the era of cheap capital. If interest rates remain high, you will see more and more of this continuing to happen. More store closures. Thank you guys for joining the 9I in the News segment. I hope this has been valuable use of your time. Stay humble, stay safe. Until next time.